There are certain places in the world that may look small on a map, but their impact can shape global politics, trade, and entire economies. One of those places is the Strait of Hormuz. At first glance, it may seem like just a narrow stretch of water, but in reality, it is one of the most critical energy choke points on Earth. This narrow passage connects the Persian Gulf to the Arabian Sea. On one side lies Iran, and on the other, Oman. And despite its size, it plays a massive role in keeping the world running. The Strait of Hormuz is one of the most strategically important waterways in the world. At some points, it's only a few dozen kilometers wide, making it extremely sensitive and vulnerable. Major oil-producing nations like Saudi Arabia, the United Arab Emirates, Kuwait, and Qatar depend heavily on this route to export their oil and gas to the rest of the world. In fact, over 20% of the world's oil supply passes through this single route. That's nearly 20 million barrels of oil every single day. In economic terms, we're talking about billions of dollars in energy trade daily. This route isn't just important for countries, it's vital for global corporations as well. Energy giants like ExxonMobil, Shell, and BP have invested billions in the Gulf region. Their entire supply chains depend on this narrow passage. If the strait were ever blocked, it could disrupt supply, delay shipments, and lead to massive financial losses. For years, tensions between Iran and the United States have remained high. And whenever the situation escalates, one question comes up again and again. Could Iran shut down the Strait of Hormuz? Iran has missile systems, naval forces, and advanced drone technology in the region. Some analysts believe in the event of a major conflict, Iran could attempt to block the strait, at least temporarily. On the other hand, the United States Navy, one of the most powerful naval forces in the world, maintains a strong presence in the area to keep this route open. If the Strait of Hormuz were ever closed, the consequences wouldn't be limited to the Middle East. The entire global economy could feel the shock. First, oil prices surge. Less supply means higher prices, fast. That would directly affect gasoline, diesel, and electricity costs worldwide. Modern industries rely heavily on energy. If energy becomes expensive, production costs rise, and everyday goods become more expensive. Thousands of oil tankers and cargo ships pass through this route every year. If risks increase, shipping insurance costs go up, freight rates increase, and supply chains get disrupted, which means higher prices for people everywhere. Major economies like China, Japan, and India depend heavily on Gulf oil. A disruption here could impact their industries, transportation systems, and overall economic stability. Experts say completely closing the Strait of Hormuz isn't easy, and even if it happens, it likely wouldn't last long, because global powers would immediately step in to reopen it. This isn't just a regional issue, it's a global economic lifeline. The Strait of Hormuz may look small on the map, but its importance is enormous. Every day, billions of dollars worth of oil passes through it. And that's why, whenever tensions rise in the Middle East, the world turns its attention to this one narrow strip of water. Because if something goes wrong here, the impact won't stay local. It will be felt across the entire world. The Strait of Hormuz is not just a waterway, it's the artery of the global economy.